Ladies and gentlemen, welcome back to the Breaking Bitcoin Market Update. Over the last few months, we've seen an incredible explosion in the price of Bitcoin and other crypto assets, as many are calling for the beginning of a new bull run, myself included, and people are beginning to lose sight of all the risks and volatility that are often associated with investing and trading the cryptocurrency markets, particularly Bitcoin. However, today I do have some evidence that is going to detract a bit from the short-term bullishness that many of you have been suggesting, and I'm going to posit the fact that, in fact, Bitcoin might be headed for a price depreciation in the coming days, weeks, and potentially months. I've talked about this before. I'm going to suggest and share with you a lot of on-chain data, as well as price charts and technicals to try to support this thesis, and finally, in the end, show how all of this is just a minor inconvenience on the way to greater and greater heights on the quest for Valhalla. Thank you for joining me today. This is the Breaking Bitcoin Market Update, and let's get cracking. All right, excellent. We are here, guys. Thank you so much for joining me today. Of course, today is May 19th, 2023, foul year of our Lord, TGIF. Congratulations, everybody. We made it through another week of volatility, of trading, of insanity, of meme coin pumps, of exchange risks, of rugs. We've seen it all. But on this glorious Friday, we are going to do our end of week analysis. We are going to look on chain. We are going to look at the price charts. We are going to look at everything we possibly can to identify what is the best strategic movement for the hodlers, for the investors, for the short-term traders, and for the degens. If you guys want to support the channel as we continue on with this analysis, make sure that you can do so completely free right here from your comfortable viewing pleasure of YouTube, Twitch, or DLive. If you're on YouTube, smash the like button like it owes you money, and consider subscribing so you never miss a live update like this. If you're on Twitch or DLive, a follow and a subscription is always greatly appreciated. Everything helps to support the growth of the channel, and you guys are amazingly awesome. If you guys want to get involved with the group, improve your trading skills, take advantage of our indicators, take advantage of our courses, take advantage of our signals, many things that we offer for aspiring and experienced traders alike. All those links are down in the description. I would suggest you start with our completely free guide, The 5 Mistakes Holding You Back from Profitable Trading. If you find value in that, you can purchase the $7 course, How to Succeed with Your Cryptocurrency Trading. And if all that is extremely valuable, let us know in the Discord, let us know in the comments section, because we always enjoy putting out new material. All right. So we've got a lot to talk about today. Let's talk about current price. Where are we at right now? Bitcoin is currently sitting at 26,853. And we are just really grinding and consolidating this level of support. Let's switch over to the big chart so we can see this in a little bit more clarity here. Now, typically, I do not like to see this. Obviously, in general, I could be biased as a Bitcoin bull and say, well, I'm not happy unless I see green candles. Aha, right? But no, the problem with this is that we have this clearly established range. And honestly, the technicals in the price chart aren't concerning in and of themselves. We have a clearly defined range. Ranges are relatively easy to trade. You're only wrong once. You buy support, you short resistance, you buy support, you short resistance, you buy support, and you're only wrong when you actually get that resolution of the range or breakout or breakdown, which we should be experiencing here fairly soon. I would not be surprised. This is how I actually see this happening. So I'll just lay this thesis out. Obviously there is the possibility that we just begin moving down quickly. There is, of course, that possibility that we just break support. We begin moving down, probably a very large death candle, something like this, something on the order of 3 to 6% sell off, clearly breaking down support and closing with very little wick. That is always a possibility. What is more likely, though, is most likely a short squeeze to at least above this high right here. So looking at 28,364. What's nice about that is that that would also allow the current bottom feeder signal, which is our most popular automated strategy. It would allow this signal. It's been accumulating for 1, 2, 3, 4, 5, 6 candles. It bought all the way down here, and it was suggesting averaging down each time. And it was suggesting a price target of 27,886. So we would be able to successfully complete that signal. if that does occur. So this is often what we see before Bitcoin breaks support. It will put in kind of a last scam pump, and then it will suck longs in, and it will also liquidate shorts who were trying to short down at the support range before actually making its movement down. So again, something like this, where we take out shorts, we take out short liquidation levels. We get a lot of people piling into longs right here. You'll see a large volume candle, and then eventually price movement down. Now, there are, of course, other technicals that support this as well. The primary one, of course, being just simply the head and shoulders chart pattern that I have pointed out several times. We do have this very clear head and shoulders pattern. And while I'm not much of a chart patterns gentleman myself, head and shoulders patterns do have a higher hit rate when it comes to Bitcoin daily timeframes and weekly timeframe structures. So this is a very clear delineated head and shoulders. We also broke the neckline, back tested it as resistance, and rejected. Now, it would be a very clean head and shoulders setup if, again, we just went with scenario B and began moving down right from here. However, I do believe a short squeeze is in order. I do feel that is more likely. And so it is likely that we do see a movement up prior to that secondary, or that penultimate, if you would, movement to the downside. So head and shoulders right there. Now, of course, the market doesn't have to respond to technical analysis. The market can do whatever the hell it wants. In the event that we do get a breakout of our resistance level here of $30,000, then upside momentum would likely continue to carry price up to our next target area of $35,000 to $37,000. However, unfortunately, I think that is unlikely at this point in time. Of course, if we do start climbing up mightily, then we'll reevaluate, and I will capitulate and say that I was wrong about everything that I said. And of course, we're going to $35,000, $37,000. But we need to be aware of this situation. But when we begin to look at the on-chain evidence, I think we'll start to see, and I think you'll agree, that the bear case does seem more likely at this point in time. And keep in mind, of course, we're only talking about a short-term price depreciation lasting weeks and maybe months, and certainly not years. It is still my very firm conviction that we have put in a cycle bottom at approximately 15,500. Call it whatever price you want on any individual exchange. We'll just call it 15.5. It is my firm conviction that that is a long-term cycle bottom. That we will not be going back down to that price level. That we will not be taking it out, whether on a liquidity grab or a wick or a spring or whatever you want to call it. No, that has never happened before. We do not go back down to the cycle low once the cycle low is put in. And for a variety of reasons, most of them on chain, once we reach that kind of capitulation level, this was a capitulation level right here when we were down at post FTX collapse in the $15,000 price area. Once we rally from that zone, historically, we have never, ever gone back down below there. We can, of course, go back down below the baseline, go back down below realized price. And we always, not always, but we typically do make that. We of course, always sell off after the rally following the bottom. So the cycle pattern, the 4-year cycle halving period is very clear. It is capitulation bottom, powerful rally, rejection to form a higher low, and then we're off to the races for the real bull run. And that's how it's happened for the last 10 years. And we're going to go on that assumption, because when something happens all the time, 10 years in a row, well, yeah, the trend is your friend until it bends, which I think is probably the wrong analogy or word to use there, but I digress. So that's the current game plan, just based off the technicals. We have the head and shoulders pattern. We have the grinding of support. And then as to resolution of this potential zone, either the breakdown immediately or the short squeeze prior to the breakdown. And I do favor the short squeeze prior to the breakdown, which does mean there is, for trade opportunities here, that does mean longs could be taken here. You're trading in the direction of the ultimate trend, which is good, which is to the upside. And of course, you're kind of taking advantage of that opportunity to catch the pop in price. The other, of course, trade ideas here are probably not piling into shorts now, because you're going to run the risk of being right in the middle of the short squeeze, which you're not going to want to hold. It's not a good trade to hold when we kind of push up mightily and you see a lot of volume. You don't want to be holding that position. Watching the lower time frames, like the hourly, is good to see a confirmed breakdown. You'll get that hourly close, and hopefully you will have you won't miss so much of the opportunity. Certainly any breakdown of this price level here, any daily red candle, I think that individuals want to be hedging or have short exposure down here to the measured movement, at least of the Head and Shoulders pattern 23.2, which is fine. We don't have to bounce directly off the daily baseline to continue the uptrend. You can see that in the previous dip buying opportunity over here, we actually closed below, even though it was on a hammer candle, a reversal candle. We did close below the daily baseline over here on the 10th of March. And then rallied powerfully off of that. So nothing concerning. 23.2 is where the current measured move is pointing down at. So take all that into consideration when you are planning out your trades and your acquisitions. Now, as I said, why is the title of the video, why is the Bitcoin market about to collapse? Well, as I've been analyzing on-chain data forever, but more significantly over the past few months, I've started to see a shift in trends and patterns and indicators over the past several weeks, which are very indicative of a decline in Bitcoin's price historically. So I posted all of this, of course, to the private group just a while ago, and I went into more detail, but I'm going to summarize what I told them this morning. I also posted a little bit of this in the free Discord as well. So if you guys are not in the Discord, I do post there regularly. I will be posting there every day. Market updates, chart setups, trade ideas. Of course, the lion's share, all of that will be, of course, going to the premium members, the members of our private group. But I also am sharing quite a bit of free alpha just for being in our Discord. So the link is in the description, discord.krakencryptocurrency.com. Make sure you guys are in that Discord if you want to take advantage of that. And also, I just enjoy that opportunity to have people read my analysis, give me feedback, because I can't see everything myself. I have told you guys many times, there are many aspects of trading I'm good at. There's a lot that I absolutely suck at, and I do my best to provide my objective, level-headed, well-researched analysis, but I will miss things all the time. So your guys' feedback and criticism is great. So this is new address momentum. This is a very important chart that I've been looking at a lot. This is one of the few on-chain indicators that I set alerts for to let me know when I thought the market was shifting. And I've gone over this before, but I'll just simply summarize. What we're watching is a graph of new address growth, okay? And we have this red, or fuchsia if you want, line, which is the 30-day moving average of new address growth. And then we have the blue line, which is the yearly average of new address growth. And the way to utilize this chart is very simple. When we see 30-day activity outpacing yearly activity, it lets us know that current activity is high and growing at a higher rate than the yearly period. And that suggests that there is fresh network activity. There is a expansion in the quantity of people that are entering the Bitcoin ecosystem, transacting, sending, and spending coins, and that refers and relates to a new influx of capital. So when we see the red line above the blue line, very simply, it lets us know that things are generally bullish and there is increasing network activity. And the more network activity there is, the more use of the chain there is, and therefore this is all very positive and good, typically very bullish and follows positive price trends. On the other hand, when the 30-day is below, when the red is below the blue, then that is quite the opposite. We are seeing a contraction in network activity, and the current activity is not outpacing. In fact, it is declining faster than the yearly average. I couldn't think of the antonym for outpacing, but I digress. So we saw over here, following the collapse of FTX, or actually right before the collapse of FTX, we started to see this sudden rise in 30-day network activity, new addresses. This was very positive and very bullish, and it occurred again right after everybody thought we were at the bottom, right? When we were kind of cruising along at 20,000. And so we started to see that new address momentum begin to pick up as more and more people were accumulating Bitcoin at the $20,000 price target. We saw the sudden collapse of FTX and the sell-off to 15,000. And although we did see a brief dip in the new address momentum, we continued to rally and raise, making higher highs in new address momentum, which is very positive, trading above the yearly average for the first time in a while. But we've seen something very interesting over the last week or so, maybe even 2 weeks. And that is this sharp nosedive of new address momentum. And this is interesting because if you look at all other kind of on-chain metrics, you will see, because of the introduction of ordinals in the BRC20 standard, you're actually seeing all other metrics kind of spike off the charts. Transaction volume, miner revenue from fees, blockchain demand, all of these things, which are typically very healthy indicators, have exploded. And that is all due to the ability to swap the new BRC20 NFTs, and not necessarily related to genuine Bitcoin interest for just BTC. We now have another factor, a derivative factor. We now have almost a $600 million market cap NFT market on the Bitcoin blockchain. So the fact that in spite of that, while all that's going on, that we've had an explosion in all other metrics due to the introduction of BRC20 NFTs. I'm calling them NFTs. I know they're not really NFTs, but I digress. They're NFTs. We've seen new address momentum take an absolute nosedive. And historically, this always precedes price depreciation. And again, this is one of those, I was talking about market realized gradient during this week's mentoring session with all of the premium members. And it is a fantastic, powerful indicator that Glassnode also offers. And that is what I liked most about market realized gradient, is that when we reach the market top of a cycle, it starts to fall off a cliff well before price actually falls off a cliff. So it's a leading indicator, and it gets you out very, very early, and very clearly. Often, you will see lots of people come on and talk about how great this indicator is or that indicator is and how clear it is. But then when you actually go to use it, you realize that it's not that great. It doesn't give as clear signals. You have to really do a lot of guesswork. With market realized gradient and also new address momentum, the signal is so clear. When you see a sharp nosedive in activity and price hasn't responded yet, that is a very clear, crystal clear warning sign that something is going on, right? Something has significantly changed, right? We reached the psychological resistance at 30K, which was also the high prior to the collapse of FTX. Prior to that kind of movement down to 20K, 30K was like that last rally high. So again, very logical reasons, psychological price target, round number, 95% of short-term holders were in profit. MVRV on the short-term oscillators were all, kind of overbought or in the danger zone. So lots of reasons for the market correction for prices to move down. But for that to now occur with a dramatic drop off in new address momentum is telling a different tale. I do believe this is beginning to suggest that we've reached a local top for this rally part of our not bear market correction, but beginning of the bull market rally, right? It's the initial rally after the capitulation bottom, powerful rally, and then retracement to establish a higher low, and then the bull market. So this is beginning to suggest to me that we might have reached our local top for the rally phase of the beginning of the bull market. And then we are now going to be entering into the first downtrend of the bull market to establish our higher low. So new address momentum, very telling. And just to zoom in and show you the extent of this decline, this is not nominal. This is very fast. This is very rapid. And we are down back below the yearly moving average for the first time since November of 2022. Okay. So this is concerning, and I think that individuals should ignore this at their own peril. Now, another metric that I want to point out is exchange volume momentum. And what we are able to see with this chart is essentially all combined exchange inflows and outflows, and then we do the exact same thing. We take the 30-day average and we take the yearly average, a simple moving average for the 30-day and the 365-day. And we're utilizing it very much the same way. The red is the 30-day, the blue is the 365-day. And when we see the 30-day moving average above the 365-day moving average, then we know that current exchange activity is outpacing historical exchange activity, which is typically good. There's an increase in interest, there's an increase in market participants, there's an increase in buying and selling Bitcoin and other related assets by proxy and extension. So typically good. We can see that when the red line is above the blue line, it's typically associated with bull markets and bullish trends. And conversely, when the red line is below the blue line, when the 30-day is not outpacing the 365-day moving average, the yearly growth, then that's typically associated with downtrends and bearish cycles in the market. Now, zooming into current events, We were actually never really out of the woods on exchange volume momentum. Notice that we were in a very clear downtrend, lower highs, lower lows on our 30-day moving average, which is more clearly you can more clearly see the oscillations, whereas with the yearly average, it's so smooth, you just see the slope of the moving average. Notice, of course, on the yearly moving average that we never achieved escape trajectory to change the angle of our slope, so still downtrending. And our 30-day moving average, of course, was making lower lows and lower highs. And we did rally very powerfully prior to the rally. We saw an increase in exchange volume momentum right here, and we started to see that 30-day really tick up. And as we were approaching our current top here around 30K, around 26K actually is when this happened, 28, excuse me. We peaked on exchange volume momentum, and we have now fallen back down below the yearly average. And this is concerning. Like, we were looking to break this trend, looking to break this cycle of lower lows and lower highs, and we do have a higher high now. But we are now back down below, suggesting that we really haven't broken out of anything. However, one way I could see this playing out, of course, is that this is the signal for the break in trend. Exchange volume momentum continues to track down along with price, but we form a higher low. And then once we reach the bottom of this sell-off, the higher low of the market cycle, then we will see this form a higher high, and that will begin to confirm and give us confluence for all of our bullish readings that we expect to see later on in the year. All right. So exchange volume momentum also bearish in the current, and also nosediving well before a significant decrease in price, an early warning sign if you are consistent with these things. Okay, so unfortunately, these two metrics, which I consider very important, are suggesting that Bitcoin is on chain losing its steam. And that we are not seeing, even though we're at support, we're not really seeing that increase in investor interest right now. And we still have a good swath of short-term holders who are in profit. So very much an incentive for them to sell if Bitcoin shows any signs of trouble right here. So overall, I do see price losing its level of support, whether after a short squeeze or whether immediately. I do see us moving down to the $23,000 to $20,000 price area, probably lower to form the cycle low, but certainly in the short term there. The head and shoulders measured movement is moving us down to 23.2K. And that is just a logical area. It's a previous level of support, all well and good. And I will update you guys once the on-chain metrics begin to tick back up. Now, in the short term, this is going to have an effect on altcoins. So altcoins are pumping, and they are searching for exit liquidity. Altcoins are going to crater if Bitcoin loses support. And so I wouldn't say that the party is over for altcoins. Bitcoin can, of course, continue to grind here for a while. And once it puts in its short squeeze, if it does put in its short squeeze, we are going to see big pop-offs in altcoins. So I don't necessarily think the party is over, but I think the mentality needs to be correct. If you think that you're going to be able to hold your altcoin position for a long period of time and not suffer drawdown, I don't think that's the case. I think you might have a week if. And then I would be rotating out of altcoin positions. I would be selling the pumps, rotating out of those back into stable coins or back into BTC if you want to use a coin margin short position to hedge your holdings. Either of those options are completely fine. I like the idea personally of rotating into USDC and probably taking advantage of some options contracts, some puts. That's probably the way I will be handling this. And that's about it. Yeah, that's about it. That's about all I need to share with you guys as far as BTC goes. Let's see here. This week I've been trading RNDR. I've had 3 successful trades in RNDR so far. I've taken about 14 trades. I was previously trading up until Wednesday ordinals, ORDI, on KuCoin futures. I took about 14 trades, 11 of which were winners, 3 of which were losers. And all 3 of the losers were yesterday, actually. So no. I had 1 losing trade on Wednesday and 2 losing trades on Thursday. And then I rotated into RNDR. Was able to catch this movement right here. And now I'm just kind of waiting for an opportunity. Of course, we are at support. This is just a 15-minute. We are at support here on the daily baseline. So this seems like a logical area to look for a position. Let me, of course, look at the broader market to see what's up, though. Um, yeah, so the hourly does not look great. We have just entered into the danger zone right here. WADA is actually suggesting the potential of the beginning of a downtrend here. So I'm a little hesitant to take that scalp to look for that long position here. But I don't know, I'll sit here and think about it for a while. Meanwhile, let's roll over to the chat and say hello to everybody. Shout outs to Yes to Crypto and Chemo Zabi. Yes to Crypto says, howdy crypto heads. And yes, I'm still bullish. Good to hear that, my friend. Chemo's, oh yes, sorry, I do have other things to look at. Sorry, I forgot. We will be looking at those in a little bit because I didn't reach the ultimate conclusion, which is this is all likely pretty good. That in the long run, we're going to be doing just fine. I am going to take a position on KuCoin on RNDR. Oh, what the heck is going on? This is not good. Give me just a second, guys. I gotta get logged in. Somehow I got logged off of the exchange. Swords, Trash Can Globe. Okay, great. I am in. It is. There we go. Yeah, small position on RNDR here. Let's see here. Yeah, just looking for these highs. Let's see here, 2.3197. 2.3197 and 2.3870. Okay. Bracket order is in. All bueno, ladies and gentlemen. I don't feel amazingly great about this position. But it's fine. Like, we play reversal baseline bounces. It's a perfectly fine trade setup. It's been a good one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times. And the philosophy behind this is very simple, right? The reason why this might not be a great trade is because we've had a sustained uptrend in RNDR for a while on the on any time frame, but on the 15-minute as we're showcasing. And we want to use our baseline as a dynamic level of support and resistance. So when price returns to our dynamic level of support, we typically want to buy because we see an uptrend. So we want to trade in the direction of the trend. However, what's slightly different here is that this uptrend has had a lot of room for a while. This uptrend's been going on for quite a bit. So it might be potentially exhausted. There's a distribution pattern right here. And so what we're kind of really watching for here is, like I just showed you, right? This is the reversal baseline bounce has been something that's worked 10 times. And typically, whether you're range trading and buying support and shorting resistance, or whether you are trend following trading and you're kind of buying all dips, your strategy is going to work until the breakout occurs in the event of range trading, or the trend ends in the point of trend following trading. And then you need to be just ready to kind of flip and shift into that short signal, because this breakage of the baseline combined with a short volatility right here is a pretty juicy setup. But that's kind of all we've got going on there. There's not too much to talk about there. Let's go back to the chat. Excuse me. Oh, Chemo Zabi, good to see you, my friend. He says it's been a while since I've seen you live. Bitcoin price increases. Super easy. Barely an inconvenience. I think it's super simple. White on Rice says, "Hey all, let's all get some fun so we can have some fun while BTC goes to hell." Little fun fair, never hurt anybody, I heard. The trend is your foe until it's no. You guys are fucking crazy. Rora Nora asks if we could please take a look at RVST. He purchased at 4 cents. Let's take a look at RVST. RVSTCE, find out what it means. No, I'm sorry, guys. Okay. Yeah, right here. RVST. Revest. Well, since this is we'll look at Deck Screener. Same thing. What do we got? $1.2 million in liquidity, 24-hour volume of $115,000. And we are up 15.67% on the day. Okay. There we go. This is what I wanted. Okay, RVST. Okay, typical altcoin chart. Launch in 2021. Fall for all of 2022. Things start changing toward the beginning of 2023. So nice rally from not 0.018. So about a 324 movement in price. Sell off, movement up, movement down. Okay, so on one hand, we have this. Let's see if it's going to. I kind of feel like I'm stretching here, but again, you guys, I'm not trying to do anything. So, because if you draw it this way, it looks like we're breaking out. But if you draw it this way, no, I don't like that. Of course, if I draw it that way, kind of looks like resistance. So we have had these big candle pumps from RVST before. On the upside, they led to a rally. But on the downside, they just kind of led to sell-offs right here. Let's see here. You know, depending on what Bitcoin does, I wouldn't necessarily count RVST out. I do like the 3 drives that it made here. 1, 2, 3. But I don't know. This doesn't look. I mean, on one hand, you have the momentum, right? Like it's obviously appreciating pretty rapidly, especially today. Up nicely today, and then we had a 2-day lull. And prior to that, we had a nice pump. What was this? 14.96 and now 15.67. I would be cautious right here. You know, I know obviously a lot of people can see this, but at the same time, a lot of people might be looking at this, you know, which one kind of look like that. In which case it looks like a breakout. Again, you kind of want to just follow the narrative and the momentum, right? Like, obviously, we're still pumping. So I don't see any reason for you to not hold. But if we start dropping from here, I'm not positive that RVST is something that I would necessarily want to hold. Again, I don't know anything fundamental about RVST, about Revest. I've heard about it, but I don't know anything, any catalyst. And like I said, I mean, my opinion is my analysis is that we are going to see the Bitcoin lose support, which is going to cause altcoin markets to crater. But in the short term, prior to Bitcoin doing that, we're going to be seeing exit pumps, because I think a lot of other market participants can also see what I see in the traditional chart of Bitcoin. So 4 cents, I think that's a good entry. I would defend that, or excuse me, I would not defend that if price came back to 4 cents. But if this is also a moon bag for you, then you don't really need to take any action. I think that we're going to see higher prices, but you're going to have to sit through some drawdown. So if in the event that it's one of your moon bags and you start to see Bitcoin lose support and you start to see RVST begin to break down again, one potential issue is to just sell at a slight profit as long as it's higher than your entry price, and then just look to repurchase back lower. Let's see here. Cryptonomics suggests that price will dip to 22K. Thank you very much, Roranora. I appreciate you, my friend. Cornholio, good to see you, my friend. What do I think about the Pulse Chain release? Okay, so full disclosure, and I talked about this yesterday, I did invest, and I don't even know, like BLS. Let me see it. Yeah, Pulse Chain. Is this even real? This is a this is a BEP20 token, so I doubt it. This is on BNB2. Yeah, liquidity 100. This is not real. Yeah, Plutus. Yeah, I think all of these are scams. All of these are fake. Yeah. These all look fake to me. PulseX. This one is probably real. Yep. Pulp to wrap. Pulse to rep. So we could just look at PulseX. This one certainly has a lot of liquidity, 126.8 million. So I'm guessing this is on the actual PulseX exchange. So PulseX is doing nice, I guess. I'm really looking for, kind of something bigger than this, but anyways, so apparently, according to Richard Hart, so I invested $7,000 in the Pulse Chain Sacrifice. So I'm really looking for this to do well this year. And what I see, or excuse me, I saw the other day that Richard Hart had posted that there was an issue with the Ethereum to Pulse Chain bridge. Something with the validators were unable to, they kind of skipped a block of transactions. I missed out on Hex because I was I thought that, oh, there's no way, right? But Richard Hart, brought Hex forward, did well with it. And yeah, so I'm looking for a similar thing here from Pulse Chain. So I will be holding Pulse Chain. I will not be really doing anything with it. I will just be hodling, and let's do it, guys. Yes, Pulse Chain launched earlier this week. Damn, was it something I said? Richard Hart, Cryptonomics. Richard Hart is the creator of. Seems like layer 2s are taking the wind out of Pulse's sails. Yeah, I mean, listen, it's just an opportunity for lots of people to get free crypto dividends because it's a fork of Ethereum. So you've got your crypto assets on Pulse Chain, so you can go over there, and I think there'll be a lot of activity for a while and speculation. And yep, just, I mean, it's the goal of all layer 2s, right? Which is, make Ethereum better. Unfortunately, I think Ethereum's pretty good just the way it is. Oh boy. Okay, so let's rotate back into BTC. So I had left off a bit of the analysis. So I talked about all the negative, but I did not talk about any of the good. Oh, also, let's talk about a little bit more negative. This is the 14-day exponential moving average of active addresses on the Bitcoin ecosystem. And again, I just want to zoom in on this, right? Notice this massive drop off in network activity that began occurring and occurred concurrently along with this massive decrease in price at the summer of 2021. And in fact, rapid declines in active addresses often precede price actually depreciating. And what do we see just occurring right now? A rapid nosedive of active addresses without a subsequent reaction from price. This is very concerning and another feather in the cap of we're probably going down. Now, but let's look at the positives now. So this is a powerful tool. It's called the Investor Tool. This was developed by Philip Swift. And what we simply have is we have a 730-day moving average, okay? And then we have a 730-day moving average times 5, okay? And so basically the 2-year moving average and the 2-year moving average times 2. The green line is, of course, the 2-year moving average. The pink line is the 2-year moving average times 5. And we can see that whenever price is above the 2-year moving average times 5, it is a generational selling opportunity. And whenever price is below the 2-year moving average, it is a generational buying opportunity. We are still, and without fail, historically, every single time, if you would have just bought when price was below the green line and sold when it was above the purple line, you would have made money. There's no situation in which if you just simply waited, if you bought below the green and you waited to sell until we were above the pink, and then you waited to buy until we were below the green, et cetera, et cetera, et cetera, there was never a time over the last 10 years that you've lost money. So where are we at right now? We are still well below the green line. We are still in that kind of generational buying opportunity area, right? So again, I know a lot of people are talking about the fact that, Bitcoin is a little bit too expensive right now. I don't think so whatsoever. Nowhere near, right? Nowhere near. And also when we look at reserve risk, this is a very useful market cycle indicator. Reserve risk is suggesting that we are also still in that generational buying zone right now. All right. Just as we were in 2019 bottom, March 2020, basically all these areas, right, which are suggesting that we're still okay to purchase BTC. And we are still well in that zone. So again, and then we can also contrast this with market realized gradient, which is suggesting a continued uptrend over the next 5 months. So I think that we're going to be seeing short-term volatility to the downside, and we're going to be experiencing a market correction, but that ultimately is going to be forming a higher low for a higher low for our cycle and kind of the secondary bottom prior to the market. We might see a capitulation event somewhere in there, just like we saw in 2019 with the March meltdown. But again, long-term signs are all good. Long-term investment in Bitcoin is very positive, in my opinion, at this point in time. But short-term price is likely to the downside. Okay. Let's look at what's kind of popping right now. And we'll go back over to the big chart. What do we have popping? Well, in the top 100s, the best weekly performance is going to be RNDR and AGIX. Those are performing nicely. CFX also up there quite as well. Frac shares. Yeah, Frac shares, RNDR, AGIX, and CFX. I would be watching those, as well as SNX, INJ, and LDO. Hex was down 50%. We're now up about 11% off of that, down 39.47. So giving back some of our losses. In the top 200, we've got big gainers like Tau, Mask, and Seller. Also WeMix. So those are definitely coins to watch. Tomi, Cass, and Flocky seeing a little bit of a downsell. Decred also had a bit of a pump, and we are now selling back down for that. BBF up 145%. Bubblefong, never even heard of that one. Likely I'm never going to either, but opportunities there. Kokos, Looks, and Wild are doing well in the top 300. Kuji as well. In the top 400, we've got some more meme coins starting to pop off. Tsuka, Bob, Mong coin. Let's see here. Oh, the Turbo is down. Ladies is down from what it was. Ladies was up crazy. Now it's only up 20%. Let's see here. In the top 500, SDEX, GMM, and AST are doing well right now. Monkey's still up well. BMX, huh? Bitmark token. Okay. Veed, Sol, Dome, Divi. Again, pretty good day for the altcoins, and I think we're going to continue to see positive price appreciations from the altcoins until we actually see Bitcoin breakdown. But certainly this is your place to go to try and find those assets. And yeah, I'm seeing a little bit of a reaction here, flirting back down below the baseline. And so now we're just watching to see if this reversal within the trend will pay off. And if it doesn't, we'll actually be looking to look for a short position here on RNDR, because that's what we're trading right now. Okay, guys, 10 minutes. I think we'll call the stream. So we'll put on some relaxing music. Let me know if the music's too loud or too soft, and I will be happy to take any chart requests or answer any questions that you guys might have. In lieu of that, I'll just start randomly talking about other aspects of trading or my life as I see fit. So I'll give you guys a few minutes to rack your brains and think of any questions that you might have. And if you're watching this later, let me know down in the comment section what you guys think of the analysis. Engage with the content, right? That's how I can improve my thought process, my analysis, so that I can give you better research. And often you guys will see things that I completely miss. You guys really are the glue that helps hold this community together. So thank you guys, of course, for your support, for your criticisms, for your optimism, for your free alpha. It is much appreciated, and you guys are amazing. I think things I'm going to do after the show today are going to be, I've got a couple of tasks that I got to do. I got to plan a camping trip, and I also have to plan what kind of boat we're going to go on when we go on vacation here in a couple weeks. And then I'm going to probably go see if I can't secure my Pulse Chain tokens. Make sure that that's all well and good, because I actually have not done that yet. Andy just keeps buying the dips on BTC, 70K to 15. Load the truck. Buy at 19. Buy at the next low. There you go, man. That is a historically, that has been a strategy that has always paid off. Just buy the dips. Manual day trading is like watching paint peel. I like it when my ship sets sail. There we go. Andrew says we have 2 more years of running up. Yeah, I do agree. Let's see here. What is something else that's interesting? From Twitch, Player77 asks, what do I think about Rune and Near? Let's take a look at Rune. So Rune USDT, let's obviously start off on the daily. Well, the chart of Rune is, of course, depressing. We haven't seen. I mean, it's been a while, right? This is certainly zombie coin category. I am not into this. I am not a big believer in investing in old coins that haven't really done anything this cycle. Because that's not where money rotates into. And that's not to say that a coin like Rune won't get a pump, right? It's just that that's not how the big pumps, like you saw, what were the things that were up 1,000, 500, 600% this week? It was brand new. Nobody had ever heard of them, meme coins. Liquidity or new investors are always looking for, investors period, are always looking for the new shiny thing. So that's not to say that Rune won't benefit from a bullish market. A rising tide lifts all boats. But this is pretty ugly, man. Of course you can trade any asset, but I want to see my rules of thumb for dealing with assets like these, especially like older crypto tokens, is I need to see like very convincing momentum, and they need to fit the current narrative. So yeah, for those reasons, I'm not very attracted to Rune. I don't care that it's cheap. It's gotten cheaper and cheaper its entire lifetime. Unfortunately, this does not look like a very attractive chart to me. And for the reasons that I just explained, I think that other investors would feel the same way. Near. Very similar looking chart. Near just not did nothing since 2022. Anyways, Near is newer though. Of course, it's its own protocol, and I think that I feel better about Near. Of course, the chart's not exciting. We are trading below the baseline, so we are kind of in that historical value area too. Parallaxes and Minx are both kind of very near oversold territory. So Near probably not nearly as bad as Rune. And I'm just basing that off the fact that Near is newer. Near has a little bit more going on for it, I believe. Near's got a bit of a bigger community, and Near has other protocols that are built on top of it. So, again, not really sexy to me. These are not really the things that I'm looking for. I'm looking for new projects to add to my portfolio. But yeah. On the other hand, though, right, like if Near can certainly get back above $2, $2.25, which would be a 30 or 40, 35% increase in price from here, that's kind of the beginning of what we need to see for a rally to start for Near. In the short term, again, yeah, these are not really the trades I'm looking for here. I don't think that I'm not looking for things that are bottomed out right now and that are going to pump. I'm looking for things because I think that we're about to drop, and so we're going to be grabbing exit liquidity. I'm looking for things that are already pumping, for example, like RNDR. I'm looking for things that are searching for exit liquidity and that they haven't dropped yet. Coins that have already started to drop have already been rotated out of. So these are not the current short-term or even mid-term trading opportunities that I'm looking for. I'm looking for things like RNDR, right? I'm looking for things like RNDR. Things that are already pumping and that haven't dropped yet. This indicates that money has not rotated out of RNDR yet, and could continue to carry on looking for exit liquidity. Those are the trades I'm looking for. I'm looking to ride the currently existing pumps and catch those kind of blow off tops. Those are the short-term and mid-term trading opportunities that I'm looking for. All right. We're going to start heading for the door, guys. Thank you, of course, for all your support. Thank you for watching. If you want to support the show, make sure to smash the like button and subscribe so you never miss an episode. A like and a subscription if you're watching on Twitch or D Live is greatly appreciated. If you guys enjoy this content, I do much more for all the members in the premium Discord. We have indicators that you can access, that you can utilize on the TradingView platform. We have daily market updates and trading ideas, as well as portfolio updates. We have weekly mentoring sessions. We have access to all of our online courses. from everything from risk management to building objective technical strategies from the ground up, how to do everything systematically and algorithmically. So take advantage of those if you guys want. I also recommend you guys going and taking advantage of all of our free material. Right here, you guys can go get our free guide, The 5 Mistakes Holding You Back from Profitable Trading. It's completely free. You can go get this. It documents the most common mistakes I see traders make in the cryptocurrency space and actionable information on how I've helped lots of people fix these issues in their trading strategies. And if you guys find that valuable, for $7, you can go get my guide on how to build your own objective strategy from the ground up and avoid all the mistakes that I made when building my first system. Other than that, we will be back on Monday with another episode of the Breaking Bitcoin Market Update, guys. And I hope you have a fantastic weekend. Make sure to take this analysis seriously and make the appropriate changes to your portfolio, to your trades that you need to make. Make sure to do your own analysis, but above all, enjoy yourself. Understand that we've got a great, beautiful bull market ahead of us. Go out and enjoy your weekend, and I will see you all on Monday. Until then, trade safely. Cheers, guys.